This is why 99% of traders fail. No, that's not it. No, it's not that. Wait, you're probably going to have to watch the whole video because it's a whole number of things that cause this insane statistic. It's the most insane statistic anyone's ever heard of. 99% of traders fail. I know you think you're going to be part of the 1% that's going to win. When I say 99% fail, I'm not joking. I'm actually quite serious. On position trading, around 70% fail. But in general, overall, you won't believe the statistic. Hey, for those of you who don't know me, I'm Rob. And for those of you who do know me, I'm still Rob. I've been doing this for a long time, probably before BCE or something like that. Been around since the days of the fossils. And here we are. We're going to talk about this today, and we're going to try and figure out why 99% of traders fail. One of the main reasons to get through and to understand is that trading is a 50-50 game. And this has always been the difficult part to get across. Most of you will come back to me and say, but Rob, if trading's a 50-50 game, then surely I'm not going to make any money, because if I lose half the trades and win half the trades, then surely I'm going to end up with no money. I'm going to end up with zero. Believe me, guys, if you're a break-even trader, you're way ahead of the game and far ahead of most other traders in the game. You'll be absolutely shocked and stunned to hear how many traders don't make a profit and can't make a profit in the market, even at a pro trading desk where the guys have studied the stock market. People struggle to have anything like any good win rate. And I always tell you guys that win rates don't make you money in the market. Win rates are what cause you to think that you're winning, but you're actually not. You're actually failing. Now, there's a lot of things we have to talk about with regards to why so many people fail in the market. Let's start with a 50-50, shall we? Let's have a little chat about that. Why do you think that you are going to be in that 1% of winning traders? If you're only starting out, if this is your first attempt at trading, maybe it's your third attempt, I don't know, maybe you've been around for a while, maybe you've been around for a couple of years and you're just still losing and you're wondering why. And here's a big thing to think about. In the market, traders, it's made up of traders. It's not made up of squiggly lines. You all think that when we look at the charts and I show you a system and I say, this is the price action system. If you take a trade at this point, when the green candle comes out of the support or the resistance, and this is what's going to happen. You go, that's great. That's what I want to do. That looks easy. And believe me, it is easy. I could teach charts to a primary school child quite easily, and they'd walk away after a week quite proficient. Strangely enough, they're probably more successful than you. Do you know why? Because they won't have the same fear that you've got, the same fear of loss that you have. The thing is, you put everything on a system, a course that you paid $5,000 for, and you base everything on that system and a win rate, because to be profitable with a system means you've got to win more trades than you lose. And when you win those more trades that you lose, you've actually got to make more money on those trades than the money that you lost. And the way we trade strategically with a business plan. And that business plan is, if I toss a coin 10 times, in all likelihood and all high probability, you'll agree with me that it'll land on tails 5 times and it'll land on heads 5 times. It's just probability. You'll all agree that that is the probability. It's 50-50. But if I told you, I'll give you 2 for every win and we'll only take 1 for every loss, I don't know anybody in the market that wouldn't take that trade or wouldn't take that offer, because it's an insane offer that's obviously loaded in your favor. And if it's loaded in your favor, why wouldn't you take it? There was a trading company, and I've said this before in my previous videos, and I'll keep saying it over and over again, that only won 20% of their trades, yet they were the most profitable trading company in the street. And you have to ask yourself why that is. So the reason 99% of you are losing, or at most traders are losing. I mean, if you don't believe it's 99%, at least believe it's 70%. At least believe that more people are losing than winning. Because I know you watch all the videos and you think, ooh, I got to watch all those videos. And they're all telling me that I can turn $100 into $1 million in a week and I can just like drive Lamborghinis and money's just going to fall out the sky. And trading is the easiest thing to do in the world. Trading is easy. It's not difficult. You know what's difficult? What's difficult is getting your mind to bend around the whole scenario, getting your mind to get rid of the FOMO and the fear. And it's your mind that's going to make all the difference in the market, because all the systems in the market actually work. Would you believe that every single system that they offer you, every course they offer you, everything you learn about stock markets and Forex trading and commodities trading and all these exciting things, everything actually works. Nothing is a failure. They've all been back-tested by some genius, and every single system was invented for a reason. And that reason is it works. It has to work. All these little indicators that you get on your charts, that you get with your charting package, and all these ideas that they give you to trade with, they all work. Every single one. What doesn't work is you. You're the one behind it. You're the one that's struggling to get over the line. And this is what brings us to one of the points. What's causing you to lose is your inability to get over the psychology of trading, to understand that trading needs a business plan. I'll give you the business plan. Don't worry, you'll get it in this video. I will give you the business plan, and you will have something to take home with you after you've watched this video. It's totally free. But before we get there, we have to discuss why that is. FOMO, the fear of missing out, is one of the biggest issues in your trading. So many times I see traders watching a trade and they're so worried that it's going to run off without them that they get in too early or they get out too early. Fear of missing out, it's insane. But the main reasons, one of the main reasons, is that people believe that the squiggly lines are going to make them money. They go on this wonderful course, and on that course, they learn that these squiggly lines can make them money. They learn that if you draw a line in the sand, that somehow if you buy it there and you sell it there, that you're going to make money. Because the idea is to buy low, sell high, that's the simplicity of the market. You see, the thing is, guys, the first thing you need to understand when keeping it simple is there's only two ways the market can go. It can go up or it can go down. It's not really going to go sideways. Even if it's going sideways, it's kind of going up, kind of going down. You just have to choose which way it's going to go. And to choose which way it's going to go, all you have to do is draw a line in the sand. Whatever that line might be, whatever fancy system they've taught you, whatever $5,000 course you paid for, gave you the squiggly line system that told you how to draw your line in the sand. But what they didn't tell you is that's not going to make you money. All that's going to do is confuse your mind. You're going to trade with that system and you're going to have a few wins. Now, while you're on the course, you're obviously going to be doing a demo, which is pretty easy. And you're going to think that this is great and this is easy, and you're going to win on that demo. And then you're going to come home and find out that nobody actually told you that trading is risky. In fact, trading is so risky that if you don't like losing money and you don't like risk, you probably shouldn't be trading. Just a thought. But also, don't forget, if you join the members area, I got a trade of the day every day for you. Loads of perks, lots of information there for you. See what you like. Get involved. Get involved and drop down there and get your free Forex book as well. You have to understand, guys, that trading is insanely risky. And they all tell you that it's not. They all tell you that it's easy. So what happens is you learn this system. You learn how to trade this system. You come home, you put real money in the market. You maybe do okay for a couple of trades, break even, bit of a win, bit of a loss. Then your system starts failing on you and it starts losing. And you start wondering why. And you think, well, that system isn't really working. So what you do is you tweak it, or you look online, or you look on YouTube, you find Rob, you have a look at my system and you use my system, or you just tweak the system that you've got and you move on to the next stage, and then it starts doing okay again for a little while. And then it starts failing again. So you tweak it again, or you find another system and you move on. And this never-ending cycle of doom continues. It never ends because you keep on thinking that it's the system that makes you money. You keep on believing that you need a win rate. You keep on believing that if you win more trades than you lose, that you're going to win. And you don't understand that you need a business plan. You need a strategy in the market. In fact, you might have spent half your money on courses rather than investing it, rather than putting it in the market. Now, there's an old adage in the market that you need to understand, and that is the best way to make money with stocks or anything else is to understand that it's time in the market, not timing the market. Nobody can really time the market. They'll tell you they can. They tell you that absolute geniuses, they know how to time the market, but nobody can. I've been doing this for 33 years, guys. I've been trying to time the market for 33 years. And do you know what made me the money? Time in the market. My investments are the more successful side of my business. Because no matter how hard you try, or how much experience you gain, you cannot successfully time the market. But what you can do successfully is you can put a strategy in place, which will give you an edge in the market. Now, there's a difference between system and strategy. A system is a bunch of squiggly lines and a win rate and a line in the sand that tells you if you buy here, you in all likelihood could make a profit. It's a high probability trade. That's a system. And that's why 99% of traders lose, because they work on that system and then they believe that the system's going to make them the money. And then the psychology takes over and then they end up failing because your psychology is kind of more powerful than that system. Listen carefully. This is important. A strategy is like a business plan. So, for example, if you were going to go down the road and you were going to open a factory in an industrial area, would you do it with no idea about what you're going to do? Most probably not. You'd probably know exactly what you plan to do. You'd probably know exactly where that factory is going to be. You'd know exactly what you're going to need in that factory to make the product that you're planning to make. You'd know how much staff you need. Guess what else you would have? Loads of capital. You would have either had your own capital, or you would have found a way to get investors, or you would have maybe loaned the capital. But you'll have the capital to start the business. No business can start without some form of investment, without some form of capital, even if it's just a YouTube channel, or if it's trading platform. You need things. You can't start trading if you don't have at least a phone or maybe a computer. There are things that you need, but then you also need capital to get into your trading. You can't make money on fresh air as they tell you can. A lot of these gurus out there are quite happy to tell you that you can take $1,000 and make something out of it. Yes, you can learn to trade with it, but you ain't going to make millions out of it. And it's not going to make you a living. You're going to learn to make a profit out of it. You can maybe turn $1,000 into $1,500. Are you going to be able to live on $500 for the year? In all likelihood, probably not. What I'm saying to you is you need capital to get started. If you don't have the capital, there's always funded accounts. I do have a couple of links in the description for funded accounts. FundYourFX is there. Go and grab them. Instant accounts. They're quite a help, especially for beginners to get started with. I actually spent my entire career being against prop firms, and now I'm kind of warming up to them because they do help people that don't have that capital to get started, and it maybe gives you a jump start in the market. If you do have cash, I would recommend using it. I don't recommend anything, actually. I don't give advice. Just remember this, guys. I'm not an advisor. But what I do here does not constitute financial advice. It's just my idea, and it's what I do. This is for entertainment, guys. If you want to use my ideas, you're more than welcome to them. What I don't want you to go and take your hard-earned cash and put it in an account on leverage trading and blow it all, because this can happen. You first got to feel your way around. What I would say to people is what I would do in today's day and age, which I didn't have access to in my day. I didn't even have access to computers in my day, come to think of it, or leverage trading. But you do know. You have access to all these fancy things. And what I would say is maybe start with a funded account, which you pay a small amount of dosh for, and learn. And it will help you to maybe get ahead. It'll help give you that head start. And then if you lose it, you only lose that $100. You don't lose the 10,000 or 100,000 or 50,000 cash that you've saved all your life. At least you understand how the markets move and how they work. And if this is for you or if it's not for you, is it not going to work for me? You need to know. So the business plan is simple, guys. You've got to have some cash. You've got to have some capital to get started, because in all likelihood, you're probably going to make between 30, 40, 50% in a year. So you've got to equate that to how much you've got. You're not going to double the money very easily, but you are going to make a profit on it. That's what you intend to do. Now you've got yourself set up and you know how much cash you've got available to you wherever it's from. Now, how do you manage this cash? Let's say you've got yourself a $100,000 account. How do I manage this? Do I just go willy-nilly into that and blow all the money? Now, just remember, if it's a funded account, there's a drawdown limit. So that might be $7,000. So effectively, you've got to manage your risk based around that $7,000. The 100,000 is just an amount that you can trade with. But what I will do is I will risk 1% on every single trade. You can change that percentage any way you want to the lesser, to the higher side. The big thing you have to understand is you have to become comfortable with how much you're prepared to risk within yourself. And the easy gauge on that is, can I sleep at night with that risk? Can I walk away from my computer, phone, whatever, go to the beach with that risk left in place? Will it affect my psyche? Will it be constantly on my mind that I might lose that money? Because if it's constantly on your mind, you've traded too much. You need to trade less. Look, as a beginner, that's completely different. If you've just started out, do be careful, because there is a scenario when you've just started out of, even if you're losing $1, it's kind of like, ooh, I'm losing. So bear that in mind. You've got to get over that sort of period as well. So give yourself some time to get over that. Once you've decided how much risk you're prepared to take, all you have to do is understand that you have to keep that risk the same on every single trade. Don't change the risk. Don't move the risk around. Guys, I'm giving you a strategy here. I hope you're listening. Don't change the risk. Just because you think that you trade the US 500 better than you trade the DAX doesn't mean you should risk more on the US 500, because it will go pear-shaped and it will turn against you. Keep the risk the same. Trade the same on every single trade. How do I work out that risk? Very simply, guys. When you go and look at a trade, first thing you do is look, where am I going to get out of this trade? The most important thing on your trade is the stop loss, not the profit. Where's my stop loss going to be? Where, if I look at this trade, if it goes wrong, will it be invalid to me? Where will it be a point where I'd say, I don't want to be in that trade anymore? Pick that spot. That's where your stop loss is going to be. Then work out how much is $1,000 back to my cost. If it's 1% is $1,000, work it out back to your cost. That's my trade, right? There we go. Now you've worked out how big your trade is, how many lots, how many pips, whatever the case. Now all you got to do, make sure the risk to reward's good. Is there a good reward from that cost up to the take profit? Is there am I going to make more than I'm risking? That's the most important point. I can say to you, you must make the trade 2-to-1 or 3-to-1 or whatever, 1.5-to-1. It doesn't matter, guys. It's not that important. What's important is that you're making more on the win, losing less on the loss. Doesn't have to be 2-to-1. It would help. But if the reward's not there, you can't just take a 2-to-1 because you feel like, I'll tell you what, we'll take a 2-to-1. No, you've got to make sure that whatever profit you're targeting is a possibility, that you will at least be able to reach that target, not a situation of, I just put a 2-to-1 there in the hopes that one day it might get there. It might never get there. So keep that in mind when you're working out the risk to reward. Then it's important to manage your trade. When you go into profit, you move your stop loss up into to break even, follow your trade up, work out for yourself what you feel best with. My other videos give you some good insights into how to do that. But what you have to be careful of, and this is why 99% of traders do lose, dollar cost averaging is your worst enemy. So many traders get involved in dollar cost averaging. In other words, the price goes into a loss. You start hanging on with your fingernails because you don't want to let go of that trade. You're holding on to that trade for dear life. Why are you holding on to that trade for dear life? Because if you trade out, you have to show a loss. And if you show a loss, you are psychologically destroyed. That's the basis of it. If your account is now showing a loss, I don't know if you think the world is watching you or if you just can't see it for yourself or what's going on, but your brain can't allow you to show a loss. And that is where your downfall starts. Really, guys, if you take a loss, no one cares, except maybe the funded account that you took a trade from. They might care. They're going to show all the stats and try and take your account away and all the rest of it, but no one else cares. No one gives a damn. No one's looking at your account. So when you take that loss, switch off from it. Learn that you're going to have to take losses, lots of them. In fact, you're probably going to lose more than you're going to win. That's your win rate. You're probably going to take more losses than you're going to win. That's a lot, isn't it? A lot to take in. How am I going to make a profit if I'm making more losses than I'm winning? I just told you that. I just gave you the whole strategy on that. So if you're asking that question, just rewind the video a little bit and go and watch all that again, because that's what it's about. That's the point. That's why you're losing. And the other reason is that when it gets to the stop loss, which you said was an invalidation area, you move it away because you don't want to get out of the trade. Again, don't move the stop loss. Keep it in its place. You put it there for a reason. It's part of your plan. When you put it there and you said, well, if my trade reaches that, this trade's invalid. Don't move it. Don't move it out. The only time you move your stop loss is to the upside. You take it up to the cost. You got a break-even trade now. Now your trade's free. It goes into north, and you follow the stop loss up behind it, trailing stop. If it comes back and takes it out, so be it. You've actually made a profit. There are many reasons why traders fail, but the biggest reason traders fail is because they can't get their psychology right, because they can't get their mind around it, because they can't overcome fear. Fear is your biggest enemy. Fear is going to make you lose. That's what causes 99% of traders to lose, is because they believe it's the squiggly lines. They believe it's the system and the win rate that's making them money. They don't understand that it's the psychology that's costing them at the end of the day. If you can take your mind, switch it around, make it understand that it's going to take losses. Make it understand that there's going to be some red in its life. Make it understand that it needs to follow a business plan, a strategy. And then do your level best. I know you're going to struggle with it, and I know it's going to bend from time to time, and the rules are not going to be perfect. But do your level best to follow it as close as possible and watch the results and see what happens. You'll see a difference in your trading. You'll see a difference in your future, and it'll help you. Guys, sorry there was no charts today. I mean, this is a heart-to-heart between me and you so that you can understand why you're losing, so you can understand what's going on and what you need to do to make it better. I want to thank you guys for watching. Don't forget to subscribe. Come back for the live shows. Don't forget, on Thursdays we have the 2-step 10K challenge giveaway. If you've commented on the video, you're gonna be entered into the draw. So there we go. We do a little bit of a spin on Thursday on the live show. So join us for that show. It's 1400 GMT +2 every Thursday. And on that show, we have that little giveaway for you. Tuesdays, we have the live show at 1100 GMT +2. If you're interested in live trading and live shows. It's not a lot of live trading because I'm a swing trader. I don't trade on the 5-minute charts. I would, but I don't want you guys starting out on 5-minute charts. It's not healthy. It's not going to help you. you're probably going to end up losing money. So stick to the higher time frame, stick to the 4-hour, stick to the day charts. Those will keep you in the game. My business here is not to make you into a millionaire overnight. It's to keep you competent and to keep you in the game. Guys, keep your feet on the ground, reach for the sky. Thanks for watching. Cheers, ciao, and bye.